Hi, I'm Nick Carlile. I'm the founder of Platinum Portfolio Builder. Thanks again for your time for listening to this fairly short video. Today I want to talk about risk because we often get asked about the risks involved in investing into property. And the truth is that no investment and pretty much nothing that you do in your life is going to be completely risk-free. But with regards to property, there's some fundamental rules that you should be aware of, and I just want to kind of talk through my view on risk. So the first one, which people see as risk mitigation, is diversification. So not putting all your eggs in one basket. Now that can mean that you don't put all of your eggs in a single basket, as in a single asset class. But with regards to property, in my view, you shouldn't ever put all of your available capital into a single property deal or even a single type of property. Diversification can happen still within property, and you can invest in properties that are going to give you equity growth and income as well. The other thing from a property point of view, which is really important, and I've lost money over the last 20 years in property when I've chased deals, and in the past when I have lost money, it's usually because I've chased the deal that I should have kind of let go a long time ago. Excuse me. And for us at Platinum Portfolio Builder, one of the most important things that we do is the deals that we don't buy are almost as important, if not more important, than the deals that we do buy. And property certainly isn't a get-rich-quick scheme. If you're looking for a get-rich-quick scheme, then property certainly isn't that. One of the biggest risks that I'm keen to explore with you is the risk of leaving your retirement to chance, because that's what my dad did. Many of you have heard this story before. He paid into a traditional pension for some 30 to 40 years and got about half of what he thought he should have done, and he basically sleepwalked into his retirement and he left it to chance. Now, none of us really know what's going to happen in 10, 20, 30, 40 years if that's the retirement horizon for you, but what we do know, what everyone really knows at the back of their mind, is that the traditional pension system is fundamentally flawed. It's fundamentally broken because there are more people taking money out than are putting in. And there was a report out this week by a pensions expert that highlighted that pension funds are starting to take greater risks with your money because of the lower returns that are coming from the bond market. Now, pension fund managers have a very difficult job of giving extremely secure returns, because it is ultimately your pension funds that they're investing, but trying to get the highest return possible. And they used to traditionally go very much to the bond market, but the returns have plummeted in that sector, and so they're starting to take bigger risks with your money. So something to be aware of. Now, in terms of dealing with risks, there are three ways to deal with it. You can, once you've identified the risk, you can eliminate it completely. You can be aware of the risk and manage it, or you can insure against it. And in property terms, when you invest into property, you've probably got risk that is associated with each of those three items. So the elimination of risk, the management of risk, and a certain amount of insured risks. When you're looking to invest in property, I would say take calculated risk. Don't overanalyze, don't get into analysis paralysis where you're waiting for the perfect deal, the perfect interest rate, the perfect mortgage product, the perfect government, because that doesn't happen. But I fundamentally believe that the next 3 to 5 years are going to be about as perfect as possible for you to invest in property if you want to. Now, one of the key things in terms of risk is about protecting the downside. And there are really only two things you can do with property. You can buy it to rent it, and you can buy it to sell it. Now, the biggest risk in renting property is that interest rates will increase, and the biggest risk with selling property is that the market is going to decrease. Now, you can protect both of those risks. You can't eliminate them completely, but you can protect against both of those risks by buying properties like this that are heavily discounted. This is a particular deal that we've just completed. There are 2 blocks identical to this, which 2 of our clients are buying in Rotherham. They're 6 2-bedroom apartments, a valuation of 660 grand, and a cost, including all of the costs, of just less than 400 at 390. So this is equity of over £270,000 and a 40% discount. Now it's the discount that de-risks your investment, because ultimately if you need to sell the property, then you can sell it and you can leave some of that discount on the table for an incoming buyer. If you need to get out of the property quickly because of a change of circumstances or indeed a change in the market would have to move downwards by almost 40% for you to be in a loss-making position with this kind of investment. The other protection from rising interest rates, apart from taking fixed interest rate mortgages, is that the rental income on this kicks out about a 10% gross yield, which means that interest rates can rise to a certain extent and you still be well protected, well insulated against those rises. So to summarise in terms of risk, you've always got to ask what's the worst that could happen. You've got to look at alternative exits, and you've got to buy property investments that de-risk it, both from an equity point of view and a cash flow point of view. Now, in my opinion, the biggest risk that most people do is they take a risk of doing nothing and hoping that the universe is simply going to provide for future retirement and the like. And the reality is that rarely happened. It didn't happen to my dad. He sleepwalked into his pension and ended up with very little of what he thought he should have. So, in my opinion, now's the time to come and talk to us about property investment. Our doors are always open, it's completely without obligation, and we'd love to meet you at one of our upcoming events. Thanks for listening.